Hello everyone. Today we delve into NIO CEO presentation, highlighting their strategic focus on immediate results and long-term vision. Find out what this means for NIO market position. Let's get started. So folks, I've got something really exciting for you today. We're going to talk about an amazing video clip featuring the CEO of NIO, where he was giving a detailed presentation. In this clip, he discusses some important changes they've made within the company, highlighting a new focus on short-term goals and objectives without ignoring their long-term vision. It's all about maintaining that delicate balance where they are working hard to achieve immediate targets while also securing their long-term path. They've put a lot of thought into this and are implementing real changes. When it comes to ONVO deliveries, which many of you are curious about, there's good news. They've made several adjustments to ensure that they can fulfill most of the orders by the end of this year, which is a big deal. They're working hard to achieve short-term gains without sacrificing their long-term plans. So, it's a really exciting time for NIO. Now, let's talk about what the CEO had to say. The CEO opens by discussing the dangers of long-term thinking if it's not handled with caution. Long-termism can indeed be a trap if a company isn't careful about how it navigates it. He points out 3 specific pitfalls they've identified in their journey with long-term thinking, and some of these issues they've already encountered, while others remain potential risks they need to watch out for. The first pitfall: organizational inertia. In today's world, where everything is moving faster and faster, companies can't afford to be too stuck in their ways. If they are slow to adapt to changes, they risk missing out on key opportunities and falling behind. The cost of being inflexible can be quite steep, especially in an environment where the landscape is evolving so quickly. The second pitfall revolves around capital constraints. As a startup competing in an industry as vast and fast-growing as theirs, they have to be strategic about where they focus their investments. Not everything can be treated as a long-term investment. If they did that, they would quickly deplete their resources. The CEO mentions that while they continue to invest heavily in research and development R&D, spending 3 billion yen on R&D quarterly, for example, they've also had to reassess how they allocate resources to short-term needs to ensure they're making efficient use of their capital. The third issue with long-term thinking is that it can sometimes overshadow short-term execution. Everyone tends to focus so much on the long-term vision that short-term results don't seem as pressing, which can lead to poor performance in the present. The CEO has made it clear that this is not the way forward for NIO. He's emphasized the need for efficiency and has made internal changes to ensure they don't fall into the trap of using long-term goals as an excuse for poor execution in the short term. The point here is that long-term returns are decreasing in this era of growing uncertainty, and risks are higher than ever. So while it's important to keep long-term goals in mind, businesses have to navigate the short-term challenges with agility and precision. The CEO remarks definitely boost my confidence in NIO's strategy. They are ensuring that they focus on short-term wins while keeping an eye on the long term. Now, I know many of you are asking, is it too late to buy NIO stock? So, let's take a moment to think about it in context. If we look at Tesla, particularly before and after the launch of the Model 3 and Model Y, we see a clear pattern. Tesla was at a similar inflection point before those mass-market vehicles were launched, and once they hit the market, the stock saw massive growth, multiplying many times over. And NIO is also at a similar inflection point right now, as the ONVO series is being positioned as the company's equivalent of the Model 3 or Model Y. Currently, NIO is doing around 20,000 vehicle deliveries per month with their high-end, premium models. These are not budget cars. Either NIO vehicles are priced significantly higher than most other cars on the market in China, costing over 300,000 RMB. That's more than double what the average consumer is willing to spend on a vehicle. So, NIO has been primarily serving a higher income demographic, people who are either quite wealthy, own their businesses, or hold high-ranking positions in their workplaces. This is similar to how Tesla originally catered to high-end consumers with the Model S and Model X. But once Tesla introduced the Model 3 and Model Y, it was able to tap into a much larger, more diverse market, and we all saw what happened to the stock afterward. NIO is at that same juncture now with ONVO. The ONVO series is designed to cater to a broader audience, just like the Model 3 and Model Y did for Tesla. NIO has already captured around 40% of the luxury EV market in China, which is impressive in itself, but the luxury market is relatively small. ONVO will open up the mass market for NIO, allowing them to vastly increase their monthly sales beyond the current 20K vehicles they're moving with their premium line. This will significantly expand NIO reach and, naturally, its revenue potential. On top of the ONVO line, NIO is also launching their Firefly sub-brand, which will target the budget market. This is comparable to Tesla releasing a $15K car, something designed to be highly affordable for the average consumer. NIO Advantage here is that their vehicles can use battery swapping technology, which, combined with battery rental options, will allow them to offer these cars at an even lower price point, making them accessible to almost anyone. With these developments, we can expect NIO delivery numbers to multiply twofold or even threefold. And what happens when delivery numbers skyrocket? Revenue follows suit. NIO is investing heavily in its future, not only in R&D but also in new infrastructure, such as more battery swap stations and energy solutions that will eventually help stabilize the grid. All of this points toward long-term success. But what about profitability? NIO isn't currently profitable, but with these new product lines and infrastructure investments, it's likely just a matter of time. Once ONVO, the main NIO brand, and the Firefly brand are all delivering at scale, profitability will follow. The CEO might not be universally loved, but you can't deny that he's got a vision. NIO's ability to capture 40% of the luxury EV market in China is a testament to that vision. Other companies in the industry are taking notes from NIO playbook when it comes to building luxury EVs. So, to answer the big question, should you buy NIO stock now? I'm not a financial advisor, so I can't tell you what to do. But if you're thinking in the short term, you might want to do your own research and maybe reconsider. However, if you're thinking long term, say 10 years or more, then this company has the potential to be enormous. In 2 years, by the end of 2025 or early 2026, NIO could be a giant in the industry. The potential for the stock to 10x or even 20x from here is very real. However, be prepared for short-term volatility. There may be some pullbacks as the market corrects itself, and you might hear some bearish voices along the way. But even if NIO were to run into financial difficulties, there's no shortage of investors willing to back them, including the Chinese government. In conclusion, if you're looking for long-term growth, NIO is a solid bet. Just make sure to do your own research and invest wisely. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.